Hi guys, Adrian here from Tradeology, and today we're going to cover the Parabolic SAR or SAR. Now, the Parabolic SAR is a trend-following technical indicator that was originally a trading system called Parabolic Time or Price System, developed by J. Wells Wilder, Jr., who introduced it along with other systems and indicators in 1978 in his book, New Concepts in Technical Trading Systems. The Parabolic SAR has been around for decades, but it is still used in conjunction with other indicators as part of trading systems, primarily to identify the direction of a security's momentum and serve as a trailing stop. The indicator functions relative to price and time. Once a trade is entered, it leaves enough space for the price to take its normal course as the indicator moves slowly to the direction of the trade after every candle when a new extreme point is reached, then accelerates until it reaches the maximum acceleration that is allowed. We'll look at this in a few images shortly. Before we delve deeper on our discussion about the Parabolic SAR, let's first define the terms that we will be using often to avoid any confusion. In the Parabolic SAR, the term parabolic is used because when applied on the chart, the indicator forms strings of dots that are shaped like a parabola. On the other hand, SAR simply means stop and reverse, which is characteristic of the indicator. When reached by price, it stops the current pattern and reverses to the other or opposite direction. Now, you'll note the series of red dots in the image. And with that, the Parabolic SAR identifies entry and exit points based on a trailing stop that reverses when crossed by the price. It was designed by Wilder as a true reversal system, wherein every stop point is also a reverse point. That is why every stop point is called a stop and reverse, or SAR point. In this new image, as you can see, every time the price breaks the SAR, it reverses to the opposite direction, signifying an entry signal opposite to the previous trade. When we talk about this indicator, we will be referring to high and low points often. For clarity, a high of a candle is said to be a high point or HIP, if it is higher than the highs immediately beside that particular candle. On the other hand, a low point or LOP is the low of a candle, which is lower than the lows of the candles next to it. Let's take a look at some examples. A significant point, or SIP, is the highest price during a long trade or the lowest price during a short trade. In this image, you can see the low SIP in the short trade and the high SIP in the long trade. Another important term we need to understand is the acceleration factor, or AF. According to Wilder, it is one of a progression of numbers beginning at 0.02 and ending at 0.20. This means that at the beginning of every trade, the Parabolic SAR moves in increments in an increasing rate. Each step increment, represented by a dot, is dependent on the AF, which is increased by 0.02 every time a new HIP buy trade or a new LOP for a sell trade is reached. The AF stops accelerating only when the maximum level of 0.20 is reached. So let's have a look at some images here. The step increment of 0.02 and the maximum level of 0.2 are the default levels and can be adjusted in the indicator's parameters. If you decrease the step increment, it takes a longer time for the price to reach the Parabolic SAR, so there are lesser reversals. On the contrary, if you increase the step increment, the price reaches the Parabolic SAR quicker, with more reversals, and could cause whipsaws. Similarly, decreasing the maximum step setting will cause lesser reversals, while increasing it will cause more reversals. Let's take a look at some advantages. There are three basic types of moving averages, but most traders use the simple SMA and the exponential EMA moving averages. There are a number of reasons that many traders are keen to use the Parabolic SAR indicator for their trading systems. Number one, it gives enough space for price movement. As mentioned at the beginning, the Parabolic SAR functions based on time and price. This is the main feature of the indicator. When a trade is entered, the initial distance between the first SAR and the price, plus the initially slow rate of movement on the SAR, gives enough allowance for the price to move favorably. Once price is in a good trend and the trade is well established, the AF accelerates to move the trailing stop nearer the price, locking in more of profits for the trade. Number two, predicting probable reversals. You may have noticed that the calculation of the next SAR value is solely based on information from previous candles. Because of this, even if the next candle has not yet opened, you already have an idea of the possible reversal point of the price, and this is the stop value for that new candle. It helps indicate when the price will most likely reverse. 3. Simple and easy to use. Though the computation of the parabolic SAR is a tedious task, using the indicator is actually very simple and easy to do because there will be no computation required. Once applied on the chart, the position of the dots will give you all the information you need. We will talk more about interpreting the indicator shortly. Now let's talk about what the dots of the parabolic SAR mean. As mentioned earlier, all you need is to identify the position of the dots. Now, if we look at the image, when the dots are located below the price, it basically means that trend is up, there's a long trade signal, price momentum is in an upward direction, and that will remain that way unless the price hits the SAR. The dots will only move up like a trailing stock. If it's above the price, it means that the dots indicate that the trend is down, there is a short trade signal, price momentum is in a downward direction and will remain that way unless the price hits the SAR. The dots will only move down like a trailing stock. Now, let's cover some uses. To maximize the usefulness of the parabolic SAR, make sure to use it in conjunction with other indicators and only when the market is trending. This is because in a flat market, the indicator will make more signals and will only cause whipsaws. Wilder recommends using the Directional Movement Index or DMI or the Commodity Selection Index CSI. The other technical indicators and techniques commonly used with the parabolic SAR are MACD, stochastics, moving averages, trend lines, support and resistance areas, and even candlestick patterns. Here are the main uses. Entry. By now you might have known that the entry signal by the SAR is when the price hits the previous parabolic arc and the SAR reverses. The new series of dots then begins to form another parabolic arc. When used as an entry signal, make sure to place trades only when the market is trending well and only in the direction of the trend. You can use one or more trend following indicators to confirm this. Here's an example. Using a short period SMA and a longer period SMA, when the short period SMA is above the longer period SMA, the trend is up and only long trades will be made. A trade will be placed as soon as the dots change location from above the price to below the price. The same is true in the opposite situation. Short trades will only be entered when the trend is down, indicated by the short period SMA that is crossed below the longer period SMA. So in this image here, you can see the trend is down. The 10 period SMA is below the 50 period SMA. And since the short period SMA is below the longer period SMA, it confirms that it's a downtrend. Notice that the parabolic SAR makes longer and more reliable arcs if found above the candles. This is why we should only sell when the market is in a downtrend. Let's look at the exit and trailing stop situation. This is the most common use of the parabolic SAR. As soon as the price touches the SAR, the current trade is exited. This exit signal is simultaneous with an entry signal. So in the image, we can see the price touched the parabolic SAR where indicated, and the SAR switched direction. Every trader has experienced entering a trade and making a substantial gain, but then the market suddenly begins to go the other way. The dilemma of whether or not to exit the position, how far you are willing to go, and how much profit you are supposed to make kicks in. At this point, your judgment will almost likely be wrong, clouded by your emotions. The parabolic SAR can help you solve those problems. The best features of this indicator are that it's so easy to interpret. It only moves towards the direction of the trade, and it helps traders detach themselves emotionally by providing a strategic exit. For these reasons, it's very helpful in logically training your stops, especially with trades where the price has well established itself in a trend. So once you have acquired some profit, all you need to do is to follow the dots with your stop loss to lock in a portion of your profit for safety, while leaving enough space for the price to move favorably along the trend. Trend indication and scoring. Another way to use the parabolic SAR is to identify the trend of the market. Of course, the trend is up when the dots are below the price, while the trend is down when the dots are above the price. To help fine-tune your trading signals, you can use multiple timeframes to confirm the trend, but you may have to use a different indicator for appropriate entry or exit points. Now, in the image, for example, if the dots in the 15-minute, 1-hour, and 4-hour charts are all under the price, then the trend is up. Conversely, if the dots are above the price in those timeframes, then the trend is down. The rules for systems using the indicator this way would then require that orders will only be placed once the trend is the same in all three timeframes. A more advanced use of the indicator is to score the trend of the market, especially when coding EAs. As such, 5 multiple timeframes will be used. For example, the 1-hour, 4-hour, daily, weekly, and monthly charts. Scores will be assigned depending on the direction of the trend of those timeframes. Have a look at this table. When 3 of 5 timeframes have the same trend direction, the score of the trend is either -1 or +1. This indicates that the trade signal is weak, and entering the market at this point is risky, so traders avoid placing trades here. If 4 of 5 timeframes are toward the same direction, the score is -3 or +3. The market is currently showing a sustainable trend, and it's much safer to enter trades. The entry signal is now strong enough, so most traders would prefer to enter trades with this score. So let's now look at an example. Here's a simple system to illustrate how the Parabolic SAR is commonly used for entries and exits. It is applied using default settings. Step is 0.02 and max step is 0.2. Then a 50-period SMA is applied to the chart to identify the trend of the market. Usually, the rules would require the following conditions. Buy trade rules: start looking for signals when the price crosses above the 50-period SMA. This ensures that the market is in an upward trend. While the SAR is above the price, wait for it to cross below the price. When the SAR is above the price is retracing. As soon as the SAR crosses below the price, enter a buy trade. Exit as soon as the SAR crosses above the price. So, as we can see on the image, when the rules are applied, you will have the following trades. Have a look at the Euro-USD 1-hour chart. As you can see, after the price crossed above the 50 EMA, then retraced, a buy trade is entered as soon as SAR crossed below the price. The stops are trailed until the SAR crosses back above the price, where the trade is exited right away. When the SAR crossed below the price once more, another buy trade is entered. However, this time the price continues to go down and the trade is losing. As soon as the SAR crosses back above the price, it is an indication to exit and cut the losses. If the trade wasn't exited as soon as possible, the losses would have been bigger, and the profits already gained from the first trade would have been lost. That is a simple illustration on how the Parabolic SAR can save you from a lot of trouble when you follow the exit signal. So in summary, because the Parabolic SAR enables you to follow the trend and identify possible points of price reversals, the SAR has made it easier to enter and exit trades. It's important, however, to remember that it is not a perfect indicator. There will be times when the price will hit the SAR as if to retrace but go back to the trend. Using it in conjunction with other indicators for confirmation would help to minimize this problem. When using the Parabolic SAR, always note that it is only effective when used in a trending market, especially if the trend is very strong. If the price is just moving in a ranging or sideways market, the SAR will reverse frequently. The movement of the market is ever-changing, not only with regards to the direction of the trend, but also to the strength of a particular trend. Aside from that, the parameters of the SAR need to be adjusted depending on the characteristic of the financial security it is used with. In developing a trading system, it's important to note the trend-following characteristics of the Parabolic SAR. If you'd like to use your system during a ranging market, be sure to employ other techniques that are useful during those instances. Thanks again for watching, and please remember to subscribe to our channel below to receive notifications, so whenever a new video is released, you don't miss any. And again, for a free system, also check out our link in that description below.